so bold. The countless stories forever been told.
All right. Thank you all for tuning in to WJC LP 98.3 FM. I'm your host, Jeff Badu, and welcome to the show, Money Talks, where all we talk is money. Live on WJC LP 98.3 FM, on the dial in Chicago, or anywhere in the world on our website at WJCradio.org. It's a very, very hot and sunny day in good old Chicago. I'm actually sweating over here, so let me get some let me get some sweat off me a little bit. So with that being said, happy Monday. As usual, we like to come on here every Monday night and just talk about money. So this is the show Money Talks. We're live on the radio, WGHC Radio, and we're also live on Facebook, straight ahead, and then to my left, we have Instagram. So you'll notice that I look in different cameras, different directions, and that's because we're on 3 different platforms today. We're on live on the radio, 98.3 FM in Chicago. We're also on Facebook, and then we're on Instagram as well. So it's a very, very hot, bright, and sunny day in Chicago. And so with that, let's go ahead and get started. Today we're talking about building multi-generational wealth. And ultimately, you know, we'll be talking about a lot of things, as basically how to hire your kids in your business, what some people do, right? What some of the wealthiest folks in the world do when it comes to their kids, when it comes to their businesses and their ventures and everything like that. And if you can, like and subscribe, or like and share this video. It's always greatly appreciated. It allows more people to be able to tune in and listen to it, get some of this valuable information. With that being said, as usual, we like to kick it off with the market report. We'll do a fast track market report. Let's do about maybe 10 minutes, and then at about 7:25 p.m. Central, we'll get into the topic. We won't keep it too long today. Unfortunately, there was a slight late start, slight delay today, so sorry about that. So let's talk about the market report as of June 4th, 2021. Stocks were mixed last Tuesday, right? So the stock market was ultimately mixed last Tuesday to begin the holiday shortened week. So, of course, last Monday was Memorial Day. Happy belated Memorial Day to everyone. We actually weren't on the radio last Monday. The Russell 2000 climbed 1.4%. The global Dow went up 0.6%. The Dow went up 0.1%. The NASDAQ and the S&P 500 each dipped 0.1%. Yields on 10-year treasuries, the dollar, and crude oil prices ultimately advanced. And then also energy gained nearly 4.0% as the OPEC Plus alliance agreed to increase output in July. Real estate and materials also advanced more than 1%. All right. So let's talk about, and also European markets closed higher for the 4th consecutive month as economies continue to show signs of recovery from the pandemic. So it looks like some economies are basically recovering from this COVID-19 pandemic as people are getting vaccinated, and just some more stability in the world ultimately. And if you're just joining us, once again, we're live on WGHC LP 98.3 FM. We're live on the radio, and you can also catch us on WGHCradio.org, or we're streaming live on Facebook, streaming live on Instagram. This will all be posted. It is recorded, and we'll be able to get you that information that you need. All right. So let's go ahead and continue real quick. Wednesday was slightly higher as investors awaited the release of important employment data due later in the week. The energy sector continued to climb as crude oil prices jumped 1.5%, reaching $68.75 per barrel. Real estate, consumer staples, technology, utilities, and financials were the other market sectors to post gains. All right. So S&P 500, NASDAQ, Dow, and the Russell 2000 didn't really change that much. So there wasn't a whole lot that happened last Wednesday. Now let's talk about last Thursday. The Dow the downward trend in unemployment claims wasn't enough to spur the market last Thursday. So basically, there appears to be a downward trend in unemployment claims. So less people are filing for unemployment. Let's see here. NASDAQ went down 1%. Russell 2000 went down 0.8%. Then let's talk about Friday. Last Friday. Friday is my favorite day of the week, by the way. Stocks climbed higher last Friday on the heels of decrease in unemployment claims and increase in hires. Tech and communication services led the sectors. Each of the benchmark indexes essentially gained value, which was led by the NASDAQ at 1.5%, the S&P 500 at 0.9%, the Dow and the Global Dow at 0.5%. And then the Russell 2000 went up 0.3%. So overall, last Friday was a good day, pretty good day in the market. So last week ended with each of the benchmark indexes essentially scoring gains, led by the Global Dow, followed by the Russell 2000, the Dow and the S&P 500, and the NASDAQ. Favorable jobs data may have offset concerns of rising inflation for investors. Investors don't like inflation because things get more expensive, stocks get more expensive, and that reduces the demand for stocks. Also of importance were reports that President Biden would accept a 15% floor. This is huge, a 15% floor on corporate taxes rather than raising the tax rate from 21% to 28%. So right now the corporate tax rate is 21%. And they were thinking about it going up to 28%, but now they're thinking about a minimum or floor of 15%. The president also offered a $1 trillion infrastructure plan, down from $1.7 trillion originally proposed. Among the market sectors, energy again led the way, up 6.7% for the week, while consumer discretionary shares and healthcare fell. Crude oil prices have increased nearly 43% year to date. So if you've noticed gas prices higher, well, there you go. That's some data right there. So ultimately, they're thinking about this tax reform. And then they're also thinking about this infrastructure plan under the Biden administration, right, which would increase taxes for the quote-unquote wealthy, high-income earners, and it would basically reduce taxes, or not necessarily even reduce taxes, but create more incentives for middle to low-income families, essentially. So that's what's going on there. There's talks of a potential fourth stimulus package, by the way, so please be on the lookout for that. I'll definitely let you know if I hear of anything. But there's ultimately a fourth stimulus package that's ultimately in the process of being considered. All right. So with that being said, let's talk about building multi-generational wealth. And here's the bonus: while living a tax-free lifestyle. Building multi-generational wealth while also living a tax-free lifestyle. My two favorite words in life, by the way, are tax-free. All right, tax-free. It looks like we got some activity going on in the background. Let me make sure my Instagram folks, absolutely. Yeah, tax-free. My two favorite words in life when it comes to taxes. So one of the ways the rich, the quote-unquote rich, right, the quote-unquote rich get richer is they consistently build wealth on a tax-free basis. A multi-generational tax-free basis. They acquire assets that allow them, they acquire income-producing assets that allow them to wipe out their tax liability. All right? So keep that in mind. Let me just wave at a few people on Instagram here. And if you're just now tuning in, by the way, you're listening to my show, Money Talks, where all we talk is money, on WJC LP 98.3 FM, Chicago. Just a reminder to visit our website, WJCradio.org, where you can listen live, make a donation, sign up for our email, and also a lot more. Absolutely. Shout out to Cosby Mike. Shout out to Money Talks EDU. Absolutely. All right, there we go. And shout out to those listening to us on Facebook as well. Definitely appreciate you guys for sure. So today we're talking about building multi-generational wealth on a tax-free basis. You might want to take notes, especially if you read the book Infinite Expansion, How to Infinitely Expand Your Vision of Abundance, which is available on Amazon right now. All right. So remember, one of the ways the rich keep getting richer is because they're building wealth on a multi-generational basis. So always keep that in mind. They're building wealth on a multi-generational basis and living a tax-free lifestyle. A tax-free lifestyle. They teach their kids how to build wealth early, up front, soon, early, while they're young. And they can also utilize their kids in a good way, of course, not manipulating or anything like that, but they're merely utilizing their kids as a tax loophole or a tax deduction that are far beyond the ones that an average individual has access to, namely a W-2 employee. As a W-2 employee, you cannot hire employees. You are an employee, basically, right? Unless you have a side business that you are able to hire people off of. So always remember that one of the pathways to building wealth is ultimately by starting a business, hiring your people, hiring your family, and build multi-generational wealth and then reinvest the profits into income-producing assets such as real estate. By the way, this is a big announcement. I have a course coming out very, very soon, a course like no other called Infinite Wealth. The 3 steps to building infinite wealth on a tax-free basis. That will be coming out in about 3 weeks or so. And this will be big. Right? It's a very, very short course, nothing too long, nothing too crazy or intense or anything like that. It's just an opportunity for everybody to say, hey, let me sit down for 2 hours or an hour at a time, and let me go ahead and just sit down and get some knowledge, get some education, a fast track, a blueprint, you call it. So it's called Infinite Wealth, and that will be available very soon on the jeffbadu.com website. And so we'll be releasing that in about 3 weeks or so. So by the end of June, you should be getting something. We'll do a 4th of July special, right? So we'll be doing a 4th of July special on that. But it's basically anybody who ever couldn't afford our services or just wants a do-it-yourself sort of model will be able to ultimately have basically they'll be able to tune in into the information in a nice summarized format and get a lot of the things that you would need to learn as a business owner when it comes to taxes, wealth building, real estate, life insurance. It's all in one package, all in one platform. You can follow along. You can pause it. You can play it. You can do whatever you want. Course will be coming out soon, and so that'll be pretty big. And we'll be teaching how to build multi-generational wealth on a tax-free basis. So let this be just a snippet, right, to the course itself. Of course, what we're talking about today is very important information, so I do encourage you to take notes, but understand that we have that Infinite Wealth course coming out soon. Feel free to shoot me an email, shoot me a note at jeffbadu@gmail.com if you're interested in the course. You might just be able to get a special or so. And you can also check out my website, jeffbadu.com. Once again, that's jeffbadu.com. We'll be doing a lot of big things later this year for sure. All right. Let's continue. As we're building wealth, we should aim to teach our kids wealth building principles along the way while assuring that we're building and leaving a legacy. Right? Because when you leave this world with nothing, you'll be remembered for nothing. Just that. When you leave this world with something, when you leave the world with a lasting impact, that's when you'll be recognized. That's when you say, you know what? I'm proud of myself. Right? Today's my last day. If you know if that day was your last day. If you don't, then at least you would know, hey, I went away knowing that I'm a proud person of what it is that I have accomplished. right? The purpose of life is to live with a purpose. And part of that purpose is to build a legacy around that. Part of that legacy is to leave things behind for the people that you love. Maybe it's just a charity, right? Maybe it's a charity you care about, such as the Badu Foundation or Brett Cross, or it's WGHC 98.3 FM, right? It could be anybody. It can be anything. It can be your kid. It can be your spouse. Leave something in this world that you'll be proud of, that your kids, your future that comes after you, the people that come after you will be proud of, right? That's what it's all about. Will you be remembered as somebody who left nothing, or worse yet, debt for your loved ones? Or will you be remembered as somebody who truly had a lasting impact, right? Build multi-generational wealth for their kids, for their people, for their loved ones. What will you be remembered for? Right? As a matter of fact, if you want to post in the comments, we're always welcome to comments. We're live today on Facebook. We're live on Instagram. You can feel free to post your comments, your thoughts. What do you want to be remembered for when it's all said and done? But let's get into the topic. One thing that the wealthy do, or one thing you can do as a wealth builder, as somebody who's listening to the show right now, Money Talks, is you can hire your kids in your company if you have kids. If you don't have kids, take notes. Take notes, because in the future, I can imagine you probably want some kids, right? Or maybe you don't. Then pass this information on to your loved ones. So hire your kids in your company. It goes a little something like this. Remember that the rich pay very little in taxes because of the way that their income is structured. They make all their income through their business. They basically take advantage of loopholes, write-offs, advertising, hiring employees, meals, travel, utilities, clothing, all that stuff. Then they also pay their kids up to $12,000. Each kid, they get a write-off for that. And then if there's money left over, they have two choices. One, do I let it go and give it to Uncle Sam at about a 30 to 40% tax rate? The average American pays 40% in taxes, by the way. Or do I reinvest the profits into income-producing assets, such as real estate? What do I do? Do I let it go to Uncle Sam? Or do I reinvest the money into income-producing assets, such as real estate? You can feel free to comment. What would you do? What would you rather do? Would you rather your money go to Uncle Sam, or would you rather it be reinvested and it consistently works out for you? It consistently works for you. It makes you even more money. That's part of what we teach in the Infinite Wealth course, by the way, is how to reinvest your profits into income-producing assets, such as real estate, so that you can consistently build money into your investment or asset column, and it makes you even more money, and you save on taxes. You get the best of both worlds, because the government truly benefits, or the tax code benefits those who either hire people or they put people in housing, such as tenants. And Ms. Garcia, absolutely, she said reinvested. And then we got Class AKT 1911 said reinvest as well. Shout out to Rashad. So ultimately, right, what would you rather do? Would you rather reinvest your profits into income-producing assets or give the money to Uncle Sam? Shout out to my beautiful wife, Yvonne, who's tuned in on Facebook. And we always greatly appreciate you liking this, sharing this if you like it, right? Share this with a loved one. Share this with somebody who you think will benefit from this information. This is, of course, recorded on my Facebook. It's on my Facebook Live page. And then on my Instagram, it's on my IGTV. There's going to be a lot more stuff coming out. And remember, check out the Infinite Wealth course. That'll be coming out pretty soon. And this one is big. This one is big, for sure. All right, so what you can do is when you start a company, you can utilize your kids for tax benefits. There's nothing wrong with that, by the way. You simply, by hiring your kid, you would have hired somebody anyway. Let's say somebody to clean your home office, somebody to clean your office space. You would have hired somebody to do that anyway. Why not it be your kid, your child? Why not? Let me show you how this thing goes. You too have access to the same tools, by the way. You have access to the same tools as Bill Gates, as Warren Buffett, from a tax standpoint at least. You can do the same thing these folks do. The only difference between them and you is they have more knowledge and education on this topic. And that's why you come here to learn. That's why you buy the Infinite Wealth course, so you can learn. That's why you go to sites such as jeffbadu.com that has tons of free financial literacy resources for you. Right? That's why you do that. So hire your kids and put them on a payroll. Pay their expenses using that money instead of you paying out of pocket. Expenses such as daycare, school, clothes, prom, right? Instead of you yourself paying them directly. Then you get to write it off as a tax deduction, and they don't pay any taxes on it. Let me repeat that one more time. You hire your child to do a task, right? Taking out the garbage in the home office, shredding paper in the home office, cleaning the table in the home office, giving you advice, being your board advisor. Let's see, what else can they do? Doing marketing. I mean, kids nowadays are very savvy with the phone. So they're doing your social media marketing. Maybe you're telling them what to post, and you're posting it. I'm sorry, they're posting it for you. Just like you would have paid a social media manager, just like you would have paid a professional, even if it's somebody on Fiverr, right? We got somebody on Fiverr, for example, working on a course right now as we speak. Even if you got somebody like that, you can just hire your kid, your child, find something productive that they can do, and you get tax deductions. Typically, we like to hire them as early as 7 years old. Yeah, 7 years old. And for some reason, some people don't fully understand the concept. But think about it this way. You pay $12,000 a year for daycare for your child. And let's just say they're a 7-year-old. You would have paid this $12,000 anyway, right? Meaning each month, $1,000 a month goes to your daycare provider. All you're doing here is you have your company, your LLC, let's call it, limited liability company. You're paying, basically, your LLC is going to hire, your LLC is going to create an employment agreement between your LLC and your child. Your LLC hires your child, has an employment agreement, and all that stuff, right? Just like you're hiring anybody. They're going to be hired on a contracted basis, by the way, 1099. You hire this child, your child, right? And ultimately, you pay the child a set amount, let's say $1,000 a month. Instead of you paying that daycare provider from your own account, you use the child's account that you're putting $1,000 a month into, and that child pays for their daycare. That $12,000 that you paid throughout the year now becomes tax deductible. It's money you would have already spent anyway. Stacy asks, I'm sorry, not Stacy. Barbara, is the $12,000 the most you should pay them a year? I like questions like that. That means, a question like that means that Barbara's paying attention, right? That means that this strategy sounds too good to be true. That means that you should probably implement this. So unfortunately, yes, $12,000 is the maximum that we recommend you pay the child. And the reason for that is because of the fact that the standard deduction. So everybody in the U.S. gets a standard deduction on their taxes. When you file your 1040 income taxes, you get a standard deduction of $12,000, right? The standard deduction is an automatic write-off. So 12,000 minus 12,000 equals 0. That means the 12,000 you paid your child, they don't have to pay any income taxes on that. However, since you paid them for services, you get to deduct the $12,000. It's a double whammy. Yeah, starting at 7 years old. Absolutely, Rashad. Start them at 7 years old. You go all the way up until 18. And after 18, you can still hire them, but they would have to pay what's called the self-employment tax, which we would just set up an S corporation for that child, right? Wink, wink, You just set up an S corporation for that child, or that 18-year-old. They're no longer a child now; they're a young adult, who basically can receive the money from the LLC into their own LLC, and then their LLC pays them directly. It's a very, very simple tax strategy. It's just that a lot of people don't know about it. And Rashad also asks, can husband and wife pay? We both have LLCs. Unfortunately not, because there's only one standard deduction per person. So it's $12,000 per person as the standard deduction. So that child can only get $12,000 total throughout the year in order to truly benefit from this. So let me repeat the strategy one more time. By the way, we're doing a webinar on this where we'll be using some examples tomorrow from 6 to 7 p.m. Central. Feel free to shoot me an email at jeffbadu@gmail.com for details on that. And we're basically covering the same topic. We're just getting more into some examples. We'll be doing a PowerPoint presentation, and it'll be a collaborative group of business owners as well. So it's an opportunity to meet some people. All right. Basically, your LLC is hiring your child, right? Your LLC is paying this child $1,000 a month, $12,000 for the year. That child now, and it's going to go into their bank account, by the way. That child now pays for their own daycare. They pay for their own school fees. They pay for their own life insurance policy, their own Roth IRA, their own everything, instead of you having to pay them without writing it off. So all we're doing now is we're just writing it off. We're getting a tax deduction. That's all we're doing. We're still giving them $12,000, whatever we give them throughout the year. And on paper, by the way, it's just $12,000. So you can pay them more, but on paper, we just show $12,000. So that's the strategy. Let's go a little deeper dive into it. Some nuances, you call it. I just wanted you to understand an overall strategy. Right, break it down in simplified format. And if you have any questions, let us know on Facebook. Let us know on Instagram. We're live on WGHC LP 98.3 FM. And we're talking about building multi-generational wealth while living a tax-free lifestyle. And earlier I shouted out that our Infinite Wealth course is coming out in about 3 weeks. In about 3 weeks, it'll be released all over social media, all over email, everything like that. You get a chance to purchase the course, where let's call it do-it-yourself wealth building, fast-track training. Right, so everything that I teach to my clients that actually pay for services, you're going to get all of that in one course, in one sitting, about 2 hours or so. So you hire your kids, you put them on payroll, and then you pay for their expenses using their money, such as daycare, school. And they can help out with simple tasks, such as cleaning your home office. Or more complicated tasks, such as managing your social media accounts. Being a board advisor, maybe they give you some advice on who to hire, right? That sort of thing. I mean, they can advise you on anything. Nowadays, anybody can be a consultant for anything. I mean, there's people out there literally standing in line for people at the grocery store and getting paid for it on, different sites. It's crazy, all the things you can do for money nowadays. So hire your child. There's something that they know how to do at the age of 7. And we got Dr. Ryan. Shout out to Ryan. He said, hire as an independent contractor, W-2 employee. You hired him as a contractor, a 1099 independent contractor. So just keep that in mind. Each kid should have their own bank account. So that you're creating a bank account for them, a checking account or savings account, right? If the kid is under 18, no W-2 or 1099 is required. Don't pay them more than $12,000, as already mentioned. Barbara asked that question because that's the standard deduction, the automatic deduction that everybody in the U.S. gets, which might change from year to year, by the way. It used to be $6,000, so this strategy became even sweeter once they doubled it to $12,000 under the Trump administration, the Tax Cuts and Jobs Act of 2017. If the kid the child is not required to file a tax return because they would be under the standard deduction. You don't need to withhold any payroll taxes because they're not an employee. They're doing contracted work just like a cleaner. If you have an S corporation, please make sure you set up a separate LLC called a family management company, because if you pay them out of the LLC, out of the S corp directly, it can be viewed as an employee, which then you might be subject to paying payroll taxes, which we don't like. So you just simply set up. So if you have an S corporation, which is a tax entity or tax structure, you just create an LLC as the company that contracts with the child, right? The S corp contracts with the LLC contracts with the child. Okay. And then ultimately, let's get some more notes in here. The company must be owned 100% by the parent, so it can be either or parents, right? It can be just the father, it can be the mother, or it can be both, but basically, the only owners of the company can be the parents. The only purpose of the family management company is to pay the kids. That's it. The family management company files a tax return each year, and it shows basically the income at $12,000, and then the expense, the write-off, at $12,000. All right. So just keep that in mind. Just keep that in mind, ultimately. So basically, you can pay for their daily expenses through the earnings of the company. So you can pay for daycare. You can pay for school. You can pay for whatever it is of that child. You get to deduct the amount that you pay to the kid, and ultimately, the child doesn't have to pay any income taxes. And you got a question, do they need their own account? Yes, they need their own account, even if it's a custodial account. It needs to be an account that has their name on it so that you can pay them, and it doesn't appear as if you're paying yourself. All right. And then if it's 18 and over, you don't necessarily need this family management company, because you have to pay the self-employment taxes anyway on anybody that's 18 and older. And you just set up an S corporation for the child at that point. The child can actually have their own, excuse me. Excuse me for that. The child can have their own health insurance now, actually, because now they have income, right? And they might be able to get lower cost health insurance on their own. Yeah, it's a crazy strategy, right? They can get one through the marketplace. And at that point, they may need to file a tax return, which would also show as zero, basically, as far as taxable income. So, yeah, your child can literally get their own health insurance policy by doing this strategy. There are some other nuances to this strategy, but no need to really talk about now. These are just optional things. For example, if you're a grandparent, then you can actually hire the parent, and then the parent hires the child. I mean, literally, you have, let's say you're the grandparent, you have your LLC, then you hire the parent, who the parent would have their own LLC, and then the LLC would hire the child, which the child could have their LLC as well. You know, that's up to you. You don't necessarily need that. So it can get pretty intense when it comes to the strategy if you add generations, right? We're talking today, by the way, about building multi-generational wealth. So grandparents, parents, the kid, right? Grandkids. You're talking up to 4 generations potentially of wealth that's being built in this sequence. But in this case, we're keeping it simple. We're just talking 2 generations. Yeah, just 2 generations. Absolutely. Got a comment. Said, man, this is dope info. Absolutely. This is what only the 1% have knowledge about. So today you get an opportunity to be a part of the 1% club. By the way, your child can get their own IRA account, Roth IRA, where they can put up to $6,000 in there and allow it to be invested into the stock market, such as index funds, and it grows tax-free, potentially. They can also get their own life insurance policy, such as an index universal life insurance policy. Or they can get a whole life, which is one of the permanent life insurance policies out there. They contribute maybe $100 a month, which is only $1,200 a year, right? Or you probably want to go a little higher on that so they can build wealth faster. They can get their own 529 college savings plan. And the question, how old for Roth for the child? They can be any age as long as they work. They have earned income. Yeah, they can set up a Roth IRA. There is no age limit or restriction for Roth IRA. So they can be 7 years old and have their own Roth IRA account that they contribute to. Can you imagine how different your life would be today if your parents set up a Roth IRA account for you at the age of 7 and they were contributing $6,000 a year for you? Just soak that in for a second. Let's say you're 30 years old right now. That means for 23 years, hypothetically, let's say you did $6,000 a year. For 23 years, do compound interest on that. I mean, you may be close to about $500,000 at that point, just by reinvesting it, compound interest. These kids become millionaires by the time they're 18 because their parents are doing things like this for them. They're investing up to $12,000 a year for them, and sometimes more. You can always do more if you want. It's just on paper we can only claim a $12,000 tax deduction, a write-off. Right? This is very powerful information. So ultimately, they're building wealth over time and learning money principles early. This is what we teach in the Badu Foundation, by the way. And then you benefit from the tax write-off. It's the best of both worlds. You're getting a tax deduction of $12,000 a year for hiring your own child. And by the way, you can do it per child. So you got 5 kids, that's $12,000 times 5. It's just you can't do more than $12,000 per child, even if it's both parents. Right? And you can do this every year for the rest, up until they're 18. And then when they're 18, hey, let them off on their own. Maybe, you can still hire them, whatever it is you decide to do. These are some of the strategies the rich use to get richer. Why did the wealth gap extend during COVID-19? Because things like this were happening. Right? Things like this were happening, where people were hiring their own family members. Yeah, we got a comment. Wait a minute, all this information is for free? Man, God bless you. Yeah. This is free 99 education. Don't tell me I never did anything for you for free. Right? So this is all free information. It's recorded. You can watch it at any time. It's on my Facebook page. It's on my IG Live page. You can catch it on YouTube after the show. We put it on YouTube. And then it goes on the Money Talks Badu Edition podcast, which is also free. So this is free information. But you too have access to these same tools. What I'm telling you right now, it's been done for hundreds of years, right? This is nothing new. It's just new to you maybe. But this is nothing new. And one thing to confirm is we pay them as 1099 contractors. No W-2 payroll required. You simply create an employment agreement, or a contractor agreement. Lay out the duties, lay out how much you'll pay them, lay out who you're paying, who's going to pay, how frequent, all of that stuff. Very, very simple employment agreement document. You can have an attorney draft one up, or you can get a template online. And then you hire them, make sure they're doing the duties, and then each month you start paying them. Transfer the money into their bank account. And always seek the help of a qualified tax professional before you execute the strategy. All right, today we're giving you free 99 advice. But if you don't feel comfortable, if you need more details, then hire a professional. Like myself, or like Badu Tax Services LLC. You can get more information on our website, badutaxservices.com. Once again, that's badutaxservices.com, BADU taxservices.com. For infinite resources, check out the website, jeffbadu.com. And remember, the Infinite Wealth course is coming out very soon. if you're interested in being a brand ambassador or selling the firm and making some money, then let me know. Reach out, and I can hook you up with that. It's coming out in about 3 weeks. This will change the game forever for everybody, especially my beloved business owners that's out there. And it always helps to like and subscribe this video. And the question asks, how much are your services? It depends, right? We got clients that pay $150 for a tax return. And then we got clients that pay $15,000 for a tax plan. So it all varies. It all depends. And we got somebody already who wants to be a brand ambassador. Absolutely. We'll be sure to send out some more information on that. So there you have it. That's the information right there. By the way, if you are interested in the quote for services, check out BaduTaxServices.com. Shout out to my wife Yvonne for posting that. So with that, you've been listening to my show, WGHC LP 98.3 FM Chicago. Thanks to everyone that joined and tuned in. We are a low power station, empowering small voices to make great change. Please listen or list our website, WGHC.org, and make a donation. You can also listen to us live by clicking on the Listen Live tab on the website. Or if you're in your car, tune in, 98.3 FM if you're in Chicago. If you would like to sponsor this show or the station in any way, please leave a message for our program director using the Contact Us form. Finally, if you would like to keep up to date with new programming and news, please sign up for our email list. All of this you can do just by visiting our website, WGHCradio.org. And shout out to Millie. She says, thank you so much, Jeff, for the information. So there you have it. Building multi-generational wealth while living a tax-free lifestyle. This is what the wealthy have done for countless of years. Why are they still wealthy? Because they pay no income taxes and they consistently build wealth tax-free. And then when they make profit, they simply reinvest the profit into income-producing assets such as real estate so that they can make even more money. And then they use that profit to reinvest into things such as life insurance so that they can make even more money. And the cycle repeats itself all over and over again. And then they pass it to their kids, and they do the same thing. And their kids pass it to their kids. They do the same thing. And the cycle continues. Why are the Rockefellers still on? I mean, they're generations away from ever going broke, right? They do the same thing here. So we've got to really listen to the advice we listen to, take hold of it, do whatever you want with it. But understand this is information that only 1% of the world has access to. With that, I do want to thank you for tuning in to WJC LP 98.3 FM. My name is Jeff Badu, and I look forward to continuously delivering you all some content. Thank you.
All about God above, God above. I just wanna melt away.